Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of AMC Entertainment, ticker symbol AMC. And so here I am recording this on Friday, December 27th, after the market has closed, and AMC closed at a price of exactly $4 a share, being down almost 1.25% on the day. And so, yeah, I wanted to go over the chart because it is Friday. That is my routine. And also, I wanted to go over a couple posts that are on X. One of them I agree with, one of them I don't agree with so much, or at least think it needs to be put into context. So yeah, I wanted to go over those because I think that there's a lot of excitement with certain stocks right now, and I think AMC might tag along, but I also just wanted to go over some things that might be a little bit concerning just to be aware of. But, I am hopeful, as I'm sure we all are. But hope is a four-letter word. So I do think it is good to be considering the possibility of further downside, especially with us closing at $4 a share. If I do flip over to the web browser here from Unusual Whales, we can see that the max pain for today, December 27th, was $4 a share, and we closed exactly at that level. And so that is the maximum pain. But, we didn't close below it, so I think that's good. And so I do believe that the contracts around $4 a share with that strike would be closing in the money or at the money. So I do think that's good. But, the stock price is pretty low, as you can see here, because following the big move we saw in May, prices really resided between about $4 a share and $6 a share, for the most part being in the lower half of that. And right now we are at the bottom of it. So it is not ideal. And so I did want to point out this wick low here from December 16th at a price of $3.93. So, ideally we don't go any lower than that. I would be keeping an eye on that level. Maybe we get a wick below, that's not so bad. But if we get a close below, I do think that price could be coming down to around 350, just being kind of a ballpark level, maybe 369 just to have fun with it. But yeah, I think that we could be trading in the threes. So, I just think it's good to be cautious of that, or at least to have a plan for if that happens, to not be, so excited about the possibility of up moves that we forget to prepare for the possibility of down moves. So good to keep that in mind because, here we have just shown a lot of weakness, getting below this level I've talked about, 424, below 410, and now, at $4 a share. So it doesn't look so great. But, we didn't close at today's low, which was 396, and we did put in a little hammer candle there, which could be suggesting a bottom is in and we see a bounce. But with price being so close to this low over here at 393, I think it's possible we could go lower. And, another thing that, I tried to be optimistic about it, and, I at first was seeing some pretty similar stuff with GameStop. I'll show you that chart in a second. But, I had talked about when there was this move on December 5th, which I believe was a Thursday. We hit a high of $5.56. I believe max pain was, maybe it was $4.50, but just getting a close above $5 a share would have not only been at this orange trend line, or actually, it would have been a little bit below it, right about at it, I guess I should say, right there where the cursor is. So I guess just a touch below it. It would have been good to see price closing above $5 a share, really suggesting that the bulls, are in control. But on this 6th, that's when we got the filing of the 8K for the dilution of the stock. And I just felt like with it being on a Friday, it was really, really bad timing. It kind of sucked the momentum out of AMC, out of the stock. And I initially gave it the benefit of the doubt because I saw GameStop doing some fairly similar moves, being right around, an orange uptrend. And so I'm just going to bring up the other tickers that I have here being GameStop. And so looking at the same time frame, we can see that on that same day, on the 5th, had a green candle, was trading right around this orange uptrend. They come from different places, but, both of them being around, resistance. And GameStop has held either just below or just above that uptrend, shown a lot of strength consolidating at this level, and given a good close for the week at 32.20, whereas AMC just pulled back following that dilution at this resistance. So I just feel like, they're very different right now, and it's good to take that into consideration because I see a lot of people on X just sharing, on this day, looking at the minute time frame or hour time frame, whatever it is, the charts look identical. But if you look at the bigger picture, they actually don't look identical. I do think that AMC could be a sympathy play with GameStop if it is to start rallying, but they're in very different situations now. GameStop, I believe, is out of debt, has a very large cash pile. And so I think that they're just situated in a very good place, whereas AMC has a lot of debt. So just good to consider that, just good to be thinking about that as far as managing risk goes. And I did want to point out where this, orange uptrend comes from. And so for AMC, that goes back to the low from May 31st, so after the big move we saw in May. And then the other pivot point is this low from August 5th when the markets gap down. And so that is the time frame for this orange uptrend. We got rejected from it pretty massively following that dilution, have come back to this purple downtrend, which is based on the high that we saw. Let's see, from June 6th, and then also the other pivot point being the high from August 8th. So, you can draw that on your chart if you'd like to keep an eye on it. It does look like that was pretty notable resistance, and then we are at that level now. Maybe it's support, but, maybe it ends up being resistance, and we continue to trend down, get into the threes. And so I should note too, this low over here was 403, marked by that white line. That was the low hit on October 10th, a low of $4.03. We closed the week below it, so it doesn't look so great there. And then just flipping over to the GameStop chart, I got tons of lines here. Sorry for the clutter, but I just wanted to bring up the point that this orange uptrend actually goes back further than the AMC one. This goes back to prior to the big move in May. And so we've got the pivot low over here from, I think, April 23rd, that being at a price of 10.01. The other pivot point being the low from August 5th. And so, while we did break below that uptrend, we're trading around it right now. We actually closed the week above it. So I think GameStop is looking much better in that sense, fighting levels to the upside and well above this gap to the downside, which is at 1746. Whereas AMC also has a gap to the downside, and that's at 291. And so in previous videos, I've said I don't think that we're going down to 291. I think that's a trap for people to be waiting for their order to get filled at 291 or sub $3 a share. And I think people will probably have a lot of limit orders at that price. I think price could be going down into the threes around 350, maybe 369. Have fun with it. Maybe 320. That's not 420. Never mind. So don't have fun with that. But yeah, 369, have fun with it. But I think that price could be going lower because following this big move, I've got this range from about $3 to about $7, or more tightly, 4 to about 6. We have resided the majority of this time on the lower half of those ranges. And so I just don't think it looks as good as GameStop. Same time frame here. GameStop, if I remove the drawings, has trended up, whereas AMC has either been flat or trended down. So just good to be cautious of that. I'm still optimistic with both of these stocks. I think that AMC could be running, but I also think that it might be fading lower, and so that run might be muted. I have talked about the possibility of getting up to this range here from around 16 up to 20, but I think ultimately it would get rejected from that level, just like it got rejected from around 12 in May. But I think if it does get up to 16 to 20, it could be pulling back to 12, maybe 10, finding that as support before consolidating for a very long time, like 6 to 12 months before the next move higher. And so, yeah, I mean, I wanted to go over that, just a word of caution, but I think, it also might just be me being a little bit of a Debbie Downer, negative Nancy, just trying to manage risk and advocate for managing risk, because this does look very different from the GameStop chart. And that brings me to a post I wanted to go over from X. And so this is, a post that I actually retweeted because it makes a lot of sense to me. I agree with it, even though it's not the most bullish tweet regarding AMC. It is, though, regarding GameStop. And so I just retweeted it saying hard truth. And so let's look at this post from Volatility, who I think does great analysis. And so I'd encourage you all to follow him, Volatility there. And his handle, I suppose his name is Talati Tapan. Not sure if I'm pronouncing that right, but he is a great person for following for his analysis and stocks on X. So I'd recommend it. But anyways, in this post, he goes over AMC, talking about a bear pennant that's in place with support at 4. We closed at that. So, it's not looking as bad as it could be, but it could be looking better. And then he tags Adam Aron, the CEO of AMC, as we all know, and he says that Adam Aron dilutes when it's ready to pop. And so, yeah, I mean, that date was like a great opportunity for AMC to be closing above 5 for Max Payne, and we just got pulled back because of this, and maybe that affected GameStop negatively, but following it, GameStop has just performed much better, AMC not so much, so just good to keep that in mind. And then his comparison with GameStop broke an important level, and it may have an upside to the mid 40s with volume, just making it very clear they are not the same. One moves because of the other stock more like a side B. But, I think that you could also take this as maybe because of that dilution, GameStop was not as strong as it could have been. And so it pulled back. So I think that there's kind of this back and forth that they both can be sympathy plays for each other. If one makes a bad move, the other might follow. If the other makes a good move, the other might follow. So I think that's good to consider. But this, he is definitely referring to GameStop looking stronger, AMC following. So good to, consider, swallow the hard pill. I'm sorry. And if you are smart enough, you can figure out who is who. And so, GameStop is the strong one. AMC, unfortunately, is the weak one. And so stop comparing these two. Facepalm, facepalm, facepalm. And, with that being said, I'm comparing them in this video. He is also comparing them in some of these charts. So let's look at those charts. But I think it's good to compare them as not side-by-side comparisons, but just to be comparing and contrasting them to see what looks good about one, maybe not so good about the other, and maybe how that goodness in one, like GameStop, might be translating to be that AMC is at support, not below resistance. So let's keep that in mind. And so the first chart that he has here is for AMC. This is on the 4-hour chart. And what you can see, if I actually flip over to my chart, what he has, this is on the daily. He has, this big move up here. And then this is the bear pennant that he's referring to, but on the 4-hour time frame, not the daily. And so he sees, this big move down, pennant here. And he has this bearish pennant pattern up here with a downside move formation here, likely to break lower. And so my hope with this, which again is a 4-letter word, is that we are in fact at support. And if GameStop starts moving, AMC could be breaking to the upside here and hopefully breaking out. But realistically, what might happen is GameStop might pull back a little bit, and with that, AMC break down from this pennant. And so, yeah, I mean, it could be not looking so great. So just good to be keeping that in mind. Going over the GameStop chart, he has it, drawn very different here, with this being what would be viewed as an ascending triangle. I'm not sure if he has that up here, but you have this flat line here with the diagonal underneath, and that is an ascending triangle, more likely to break to the upside. And that is what it seems like we are experiencing. This, of course, was posted yesterday on the 26th. So, looking at the GameStop chart, if I can pull it up real quick, let's see. We can see that it did pull back a little bit, but still above that previous high of 32.12. So I think that, looks good. Even though it pulled back, we closed above that prior high. So I think GameStop looks really good. And now just pulling up the AMC chart again, because I probably will refer to it again. But yeah, just something good to consider, that these charts look very different. This has pulled back and consolidated, whereas GameStop has started to, move higher. So good to consider that and to be managing risk. And I think this is just the full screen, so I'm going to exit out of that. So yeah, I did want to mention that. And then another post I wanted to go over, this is one I did not retweet because I actually don't really agree with the thesis behind it, or really just like the logic behind it. And this is also similar to, recently I've seen people bragging about buying the dips. And, if we're at $4 a share, I think it's good to be, very cautiously, very, kind of passively dollar cost averaging to pick up, cheaper shares, because we are in that lower range between 4 and 6 that we have resided in since May. So, I think that's good, but I also think it's good to not be super, super aggressive, because we could be breaking lower. This is a downtrend. If we're respecting that as support, price could still be going lower. And so I mentioned this months ago, the possibility of AMC going down to around 350. I feel like that would be a great dip buying level to perhaps get more aggressive, but maybe not so much right here. So yeah, I mean, 393, that was a great dip buy right here, but maybe next week 390 will be a better dip buy. So just don't get cocky. Don't be rubbing it in people's faces, because, we get played all of the time by market makers and whatnot, and, thinking that we're smarter than them when the stock price is down this much. It's not really a good look. It's, in all honesty, just being ignorant and naive. So I'm not trying to say that the community's ignorant or naive, but I think it's good to just be thinking about this realistically. And realistically, this is probably getting into the threes. So have a plan for if and when that happens. And so this other post that I wanted to go over, I don't believe I follow this person, and they just made this argument that just really does not make any sense to me at all. And so Joel writes that AMC has had 10 consecutive quarters of debt reduction. And so that's good. Debt reduction, we want to be reducing our debt. But at the same time, having debt is not good. So we want to get out of debt, not just be reducing it. That's not like a sustainable thing, especially not for like years or whatever. We want to get out of that debt sooner. And just think about, what GameStop has done over the past 4 years versus AMC. We're just still in billions and billions of dollars of debt. And so anyways, continuing on, and the reductions are getting bigger. That's not exactly true based on what the data that he shares. So how long before we make dollars every quarter? How long before we make cash every quarter, even in below average box office quarters? You can work out the math on this, and I can tell you how long. I'll tell you in a minute. Remember, our revenues are trending up. Debt is trending down. DFV is now. It might not be right just now. It might be soon, though. You do you, of course, you do you. I'm averaging in. I agree with that sentiment. Averaging in, dollar cost averaging. I think it's good to be smart. I think it's good to be patient. I think it's good to expect these things to take longer than we expect. And so he says here, and the reductions are getting bigger. And that's not true. You can see it in the data here that, here, this was an increase in debt. So all of these negative numbers, yes, that's true. But what we see here for, September 30th, we see the debt right around $4 billion, billion with a B. That's a lot of money. We had this debt reduction from previous quarter of $162 million. So, that's good. But then if we look at the previous quarter from June 30th, our debt reductions are not getting bigger. Just looking at the past 2 quarters, this, was 300, negative 300. And then we go to like down half of that over here. So they're not getting bigger. Look at the numbers. Good to consider that. And let's just say, whatever these numbers are, let's just say on average, considering this last quarter, this is being generous, down 250 million, let's say. That's being generous this past quarter. The previous quarter, it's being conservative. The quarter before that, it's being very generous. And so let's say we reduce debt by $250,000 every quarter moving forward, okay? Let's just think about that. Little, exercise here. If we have $4 billion of debt and we reduce that by $250 million every quarter, it's going to take us 4 years to be debt free. And while we have financed our debt to allow for that, so I think that that's good. I think it's really good to be thinking about these numbers because he says here, where is it? How long before we make cash every quarter? I'd say at least 4 years. And so, looking at the chart, if you're struggling down here, if you're having a tough time down here, recognize that the company is in $4 billion worth of debt. And so it might take 4+ years for us to feasibly reduce that to be zero, to be net green, or, to be pretty close to zero. So that might take 4 years, 4 more years. And so I don't think that this is DFV right now because of all of that debt. Also because the chart doesn't look so great. And yeah, so I think it's just important for us to be realistic. I think there's a lot of momentum in the retail heavy stocks, whichever ones, you guys want to talk about. I just don't want to necessarily refer to them as the meme stocks, but the meme stocks, there I said it, the meme stocks. I think there's some momentum with them. But there isn't with AMC. And if so, those other names, whether it's GameStop or other ones that you like, if those start to move, maybe AMC tags along, like a side B, like what volatility was talking about. So, I just don't think it looks that great. In all honesty, just want to be serious, want to be straight with you guys. I think 350 could be a possibility, but maybe not. Maybe in the next couple weeks, GameStop really starts to rally and AMC follows. Maybe $4 is the bottom. And so, yeah, I think it's much better to be dollar cost averaging around 4 than it was to be dollar cost averaging around 5. But just have a plan for if we do start to break down, like volatility suggested that we could be breaking down from a bear pennant. That could be bringing us down to $3.50, maybe $3 a share. Hopefully, that keeps us above this gap fill here at 291, and that is just something to lure people to then get left behind. So if we start to getting around $3.69, $3.50, $3.20, or $3, I think that is starting to get into the DFV zone. Right now, I think it's kind of just in this, dip zone that we've been in the past half a year. And given the company's finances and given how they are trading differently than GameStop, I think it could be coming lower. So, you know, have a plan to DCA while it's here if you want, but have a plan if it goes down to 350, because that might be happening. And, I just don't want to be seeing or hearing people being in a lot of pain with this. This is supposed to be fun. Looking at these charts for me is fun. I enjoy doing it. But for me, after this many years being an AMC, it's to be honest, it's kind of frustrating just seeing that dilution when, we were breaking out here. Um, so so yeah, I mean, I'm prepared for 350, but at the same time, I'm taking advantage of dips below $4 a share. But they're small, they're passive, they're not aggressive, because I want to get my average down, but I also want to be able to, really get my average down if we're in the middle of the threes. So yeah, I'm sure, this is not the most uplifting video. I'm sure you guys wanted a little bit more spice, but we could get some more good dip buying opportunities, or better dip buying opportunities, I should say. Whether or not they're good, who knows? We're going to have to see where the chart takes us. But yeah, I mean, we're higher than we were back here on April 16th, which was a low of 238, almost 2 times higher than that. We were 2 times higher than that previously. So with that being said, I think if we do get a big up move, whether it's a sympathy play or, something that is, triggered by AMC itself, I think that we could be getting up to, like I said, the range from 16 to 20, but that would be a blow off top like 12 was over here. And then we'd pull back to 12 or 10 as the new floor. So that's what I'm preparing for, and yeah, I mean, just be real, and don't let the expectations be too high. And I do have to say, this is the last video for 2024 for AMC, because next Friday is going to be 2025, and I have to say, I try to make these videos because I know we're all going to be here no matter what, just to try and help us keep our chins up, but also help us be prepared for what might be coming. And yeah, I mean, I think 350 is going to be coming, but maybe not. So, I think it's good to have a plan for if we start to see a rip your face off rally in the next couple weeks or a month. But, if that doesn't happen and this fades, have a plan to take advantage of 350. So yeah, I hope you all have a wonderful weekend. I hope you're enjoying time with families around the holidays and with your family and friends. And I hope you're able to enjoy some movies. And yeah, I hope the winter weather is not too bad for you guys. But yeah, I mean, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching. Take care, you guys.